Hello, Carlos. Thank you for joining us in the Finews studio today.
Hi, Dave. Thank you for having me.
So today we're going to be talking about emerging markets. I'd like to ask you, how will US taper affect the bond markets of emerging economies?
So the short answer would be we expect a tapering without a tantrum, because the most important part of tapering is the communication. And we think the communication this year has been done quite well by the Fed. The tapering is already fully priced in, and there should be no surprises in 2022. Moreover, I think the market now is pricing in maybe too many hikes from the second half of 2022 and 2023. The market is basically leaving not enough space for any negative economic surprises. So we think it's more likely that that the rate hikes from the Fed that come right after tapering is done will be slightly slower than the market expects. And that's not a negative environment for emerging markets.
Which emerging market bonds do you see performing well next year?
We think emerging market high yield bonds are likely to continue outperforming emerging market investment grade bonds in 2022, just as they have done in 2021. The reason being that emerging market high yield bonds have spreads that are way above normal, whereas emerging market investment grade bonds have spreads that are actually below normal. So we think in this environment of raising real interest rates, emerging market high yields are likely to deliver positive total returns, whereas this is going to be a bit more challenging for emerging market investment grade bonds.
Are you worried about China's real estate sector and its effects on emerging markets?
I am worried, but not too worried. I'm not too worried for two reasons. Number one, the real estate sector in China is quite managed by the government, so it is unlikely that we will see a very severe real estate crisis, say like in Spain after the global financial crisis. And number two, the context, the global context is a lot more positive now than it was in 2015, 2016, when China had the previous slowdown. Now the European and US economy are growing at a much faster pace, which should keep global aggregate demand at reasonably good levels and should avoid a collapse in commodity prices, as it happened in 2016. So the overall context for emerging markets ex-China is a lot more positive now than it was 6 years ago.
Emerging markets accumulated more debt during the COVID crisis. Do you expect more defaults in 2022 because of this?
Not really, not above normal at least. The reason being that defaults in sovereign defaults and also corporate defaults, they tend to occur at the early stages of a crisis. Why? Because at this point, issuers like sovereigns, they can postpone some payments by restructuring their debts, and then they can pay back to their creditors after they have recovered. Now, we're not at the early stage of a crisis. We're actually at the late stage of the recovery. So all the defaults that should have happened, or most of them, have already occurred in 2020. There are two sovereigns that I think are a high risk of default in 2022. Those are Sri Lanka and Ethiopia. Both are very small, and therefore, and their prices are also quite low. So their bonds are trading at a very deep discount. The market already expects these restructurings to occur. So I don't think this should be disruptive for the broader emerging market fixed income market.
Okay, thank you very much for sharing with us those thoughts today, Carlos. We look forward to speaking to you soon.
You're welcome. Thank you for having me.